Hello, friends. Tia, your San Francisco Bay Area real estate specialist. So today's video is going to be about what is it like to be a buyer, all about the experience of being a buyer and buying your first property, whether it's a condo or an investment property, as it was in my case, or a single family home. What's it like? So if you like today's video and you want more of this content, please don't forget to like and subscribe, and please do comment. Let me know what you think. If there are questions that you had that I didn't answer, I will definitely give you a shout out. Let me know if you don't want a shout out, and I will also make sure that I answer your question or address your concern. All right, so again, let's get into it. Today, what's it like to be a buyer? Okay, so um, let's start at the beginning. You decide, okay, this is ridiculous. I've been wasting money, throwing away money, giving it to a landlord. I reasonably convinced that I'm going to be in the area that I'm in for maybe the next 5 years, maybe the next 3 years. And I definitely have been in the same line of work for the last 2 years. So, meaning I have consistent employment for the last 2 years, and it's the same type of work. Doesn't have to be the same employer because we all move around, especially in the corporate world. But as long as it's pretty much the same type of business, you're ready. I will also on a later program have a lender come and talk to us, which will be great. So they can talk to us about some of the common mistakes that buyers make and what they would like to see from buyers. And then, of course, it's an opportunity to meet with a lender and maybe get a conversation going. So we're definitely going to do that as well. And then we're also going to have a title specialist come on. So that will be nice as well. But today I'm just going to talk to you and me, about what it feels like to be a buyer. So, and what I have seen as far as buyers are concerned, and what I would hope that buyers would do a little differently in the future. So, what I generally see with buyers is the first thing you do is they hop on Zillow or Redfin or whatever online website that they've heard of, and they start looking at homes. Or maybe they go to open houses. We're not having open houses now because of the pandemic, but we are still showing homes, but we're not having, the neighborhoods go into homes in droves, looking at homes, whether or not they're ready or interested, or if they might just be a neighbor that just always wanted to see what that guy down the street had in his house, but they never had been in there. So there's none of that right now. But of course, we will be getting back into that again in the future. So that's usually where buyers start. What I would suggest is that buyers start with a lender, and or two or three. So the reason that I say that is, if you talk to a lender before you're ready, a lender will tell you what you need to do to get ready. And this is one of the biggest misconceptions that I see as well, is that people think you talk to a lender when you're ready. When you have the down payment saved up, when you know exactly what it is your monthly payment is going to be, although I'm not sure how you would know that if you hadn't talked to a lender, but what you can afford maybe for a down payment. And let me tell you why that's 100% wrong. Because everyone that I see that does that starts paying off bills, usually something that annoys them that's been there for a while, or maybe credit cards. And the interesting thing about credit cards is there's a certain way you want to pay them down that will maximize your credit score, but still shows that you're good with credit. And especially now as lending restrictions have gotten tighter, the lenders are more sophisticated. So they realize if you're just paying stuff down to try to get approved for a loan, as opposed to having shown a history of credit worthiness. So that's the number one reason that you're going to want to talk to a lender, is so you're not paying off bills and using resources that might be better suited to holding on to so that you have a larger down payment, or spread out in a more strategic fashion. So that's the number one reason you want to talk to a lender first. Secondly, you want to talk to a lender because you want to talk to a number of lenders. So you want to shop around just like you shop for a top or you shop for a car or you shop for anything else. A loan is exactly the same thing. It's a product that you're obtaining from a third party. So you want to talk to a couple different lenders, see what kind of loan programs. Generally, they're all going to look at your credit score. They're all going to look at your debt, your credit cards, student loans, car payment, to income. So that's the money you get from the different kinds of work that you do. They're going to look at that ratio, and generally they're going to offer a similar or the same interest rate. But some lenders have down payment assistance program. In some cases, you may want to stay away from a down payment assistance program because it always costs you somewhere to avail yourself of those funds. Also, some lenders have different loan programs. But one thing I'm going to say right now, and you're going to hear me say it many, 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 many times, is you do not need 20% down payment to buy a home. Please hear me when I say this and tell your friends. You do not need 20% down payment to buy a home. The minimum is 3.5%, but from what I've seen, you're generally better off to be in that 5 to 10 range because some lenders now have conventional loan programs that are at the 5%. So by conventional, I mean not FHA. Not that there's anything wrong with FHA, but when you have an FHA loan or a VA loan, number one, it makes you less competitive when you're making offers. And where I'm here in the San Francisco Bay Area, in Oakland, it's always competitive. So you want to have someone like me write you an excellent offer, hopefully with a conventional loan, because a conventional loan is the kind of loan where there are less strings attached, basically. So that's what is the difference as far as I'm concerned, for a conventional loan. Now, the lender, and when we talk to the lender, we can talk about that as well, what they see as far as the difference between FHA and conventional. In my experience, I have over 200 transactions, and what I see with an FHA loan is oftentimes we run into trouble with the appraisal, because if the property needs any fixing, and you get, an appraiser that's really feeling their oats that day, they will go around conditioning the appraisal, saying that certain things need to be fixed before the lender will fund. And a lot of times when a seller sees that, a seller is, bye-bye, I'm going on to the next offer. Now, it's my job to try to make sure that that doesn't happen, but to try to avoid that, if we can ahead of time, we try to steer towards that conventional product. Now, again, you're going to pick what's best for you. Sometimes it's a credit issue, sometimes it's a down payment issue, and the particular lender that you've decided that you want to work with does not offer the 5% conventional product. As I've said, I've seen it even from banks, and they tend to be the most restrictive. So you're usually going to be able to avail yourself of that product. But, just in case, I don't want you to feel like you're sunk if you have an FHA loan. That is absolutely not the case. But there are reasons to try to shop around ahead of time to see if you can try to get the best type of loan. It's not necessarily going to affect the interest rate, but it might affect the type of loan. And it's certainly a personality thing as well. You want to make sure that you like the lender that you're working with, that you feel that they're trustworthy, and that you've had an opportunity to look at their reviews or ask around, ask with somebody else that has worked with them, so that you get a feeling that this is the person that you want to work with. But remember, a lender is just like any other kind of salesperson. When you call a lender on the phone, it's just like walking into a retail store. Let's say walking into a retail store where the owner is behind the counter or the owner is walking around, meaning they're happy to see you, they want to win your business, and so they're going to go out of their way to try and be nice to you and see how they can be of assistance to you. Because that's the thing I encounter a lot with buyers, is the fear that the lender is going to judge them or tell them no. And that first conversation, if we have it early enough, it's not about yes or no. It's about what needs to be done so that I can have the best loan product for my situation. So that's the number one thing that I see with buyers, is they want to jump to the shopping part, which is my favorite part as well. So I can understand the instinct to want to do that, but it really should be the number one. Okay, take stock. Yeah, I think I'm kind of ready. Don't have 20%. We don't need 20%, right? So that's not it. I don't have maybe all of the down payment that I thought that I needed or I think that I need, but maybe I can get that conversation going so I can put my ducks in a row. Because most buyers that I've come into contact with, if they had had 6 months before they came and worked with me, they'd be in an even better loan product. Now, there's some buyers that come to me because they have a big down payment that they're being given. Even in that scenario, it's helpful not to scramble at the last moment, trying to get the loan together, because you still want that opportunity to shop around, to get to interview a few people, and it's not a big involved process. It's just, a 5-minute phone call and maybe another 5 minutes searching on the internet to see if there are any comments or reviews, or even friends. I mean, we all know how great referrals are. So if you get a referral, as it should, it generally pops that person up to the top of our mind, and that's probably the best way to go. But you still want to talk to the person and see what kind of loan product you're going to be offered, and see what their process is. So after we do have the pre-approval, which usually doesn't take very long, it depends on whether you go the bank route or the mortgage banker or mortgage broker route. Generally in the area here, Oakland, San Francisco Bay Area, a lot of people do tend to go the mortgage broker route, but the banks have become very competitive as well. When I came into the business, I came in during the foreclosure crisis. So I think there was so much trauma during that time. It kind of sets in my mind as though things are still the same as they were then. And that's not the case. Everything is a lot better stabilized now. And so working with a bank can be just as expeditious as working with a mortgage broker. So if you have a relationship with a bank and you like what they're offering, and it's all about the individual more so than the institution. So if you like the individual, then by all means, let's make it work. So, but you want to have that information in your back pocket. So, and here's another reason, number 3, that you want to talk with the lender up first, is because you want to know what your price point is. And this is a mistake I see a lot of buyers making too, is they don't know what their price point is. So they start maybe looking in the neighborhood where they live currently, or where their friend lives, or that they like. And, maybe that's a $2 million neighborhood, or maybe it's $1 million neighborhood. And maybe the buyer's price point is 600,000 or 700,000. Still a very healthy budget, and still a budget by which you can purchase a property, but certainly not a budget where you can buy everywhere. And that's fine, because you're looking at a starter home. It's going to be your first home. Maybe you do or don't have children. Maybe you don't have the 4 children that you're going to have down the road. You've got one coming. So, maybe that 2-bedroom house will suffice for the moment, or for the next 5 years. We squeezed in a 2-bedroom, 1-bath with 2 kids for a decade. And then we said, okay, we've got to stop investing in real estate and start investing in a larger place to be able to accommodate our growing family, especially with kids of different genders. So but you can make a smaller home work in the beginning, and maybe that's the thing to do, just to make sure that this is where you want to be. And then if things change and you decide that you're going to move, you have that investment. And now you can sell that home. Now you can rent it out and keep it, just in case you decide to move somewhere else, maybe for a better cost of living, or to make things a little bit easier on yourself. And then you get there and you're like, oh my gosh, what were we thinking? Were we crazy? We don't want to be here, so we want to move back. And sometimes if you sell the home, you cannot do that. And sometimes you decide to hold on to the home, you get where you're going, you love it, and you're like, and I don't want to deal with renters anymore. So you decide to sell it and take your big financial windfall with you. So either way, you want to make the investment in yourself as opposed to making the investment in your landlord. So those are the three big things that I would want any buyer to remind themselves of, to prepare yourself for home ownership. Then from there, it progresses to shopping for a home, making offers, um, getting an offer accepted, getting into escrow. And as I said, at a later time, we're going to have an escrow officer here so we can talk about what it's like to be an escrow. And that's another part of the adventure that I will save for another day. Looking forward to discussing it with you. I'm hoping to have some special guests to discuss as well, some escrow experts. If you're looking forward to that, please like, subscribe, and comment. Don't forget to ask questions. Tell me what you'd like to hear about, and I look forward to seeing you at the next time.